Hi, welcome to Search for Yields, the weekly newsletter from INR Bonds. And I'm very happy to announce that this edition of Search for Yields is the 100th edition. And in all these 100 editions, we have been giving knowledge, education, and also the best investments available in fixed income for financial advisors, for their clients, and for investors. And in this 100th edition, I'm very pleased to announce that the power of the ladder. We have INR Bonds has been promoting bond ladders where we believe that this is the best investment strategy when interest rates are volatile. And we have been through our analytics uh, showing that interest rates are going to rise even when it was very low and kept low for a period of time, the COVID times, and interest rates have risen very fast. And in all this, other products have given either negative returns or extremely low returns, and investors have lost a lot of money when it adjusted for inflation or in terms of pure opportunity as well. But bond ladders have delivered very well, especially the identified bonds. And today I'll showcase the bond ladder to you on a ladder that was well invested through by our financial advisors for their clients. And the ladder continues to perform, and more ladders are gaining more prominence. And in this 100th edition of Search for Yields, we would like to tell you that the INR bonds is the best bond platform available for you, as apart from just providing the correct all the bonds that are on offer in the market, so that you can take your own view on the bonds and take the best available uh, returns in terms of all the and extreme transparency in terms of all the returns available on the bonds in the market. We also give portfolios, curate bonds, and provide our own risk rating, which is the most important factor because we take in a whole host of other factors, which enables us to identify a whole host of risks. And the most important part of INR bonds is that we provide safety, returns, and liquidity. And liquidity is extremely important for us because we believe that investors should buy and sell bonds whenever they require.
As a financial advisor, my biggest responsibility is to help my clients make the right investment choices. Now, with INR bonds, buying and investing in bonds for my clients is quick and easy. With my guidance on bonds, my clients are happy and I'm getting new business every day. Register as a financial advisor on inrbonds.com to help your clients invest and save better through bonds.
Back to the bond portfolio. What is a bond ladder? Bond ladder is just like a regular ladder. You keep climbing up. So in a bond ladder, you keep climbing up the maturities. So you invest X% in say 23 maturity bond, X% in 24 maturity bond, X% in 25 maturity bond. And the idea for the bond ladder is that as bonds mature, the reinvestment can take place at higher interest rates because the belief is that interest rates will go up. And also you need to understand what kind of ladder you need to build in terms of should you go very long on duration or should you go much shorter and then take advantage of yields when yields are long duration bonds have risen sharply, and when you can actually have the proceeds to invest in the long duration bonds, yields can come down and there can be good capital gains to be made. I'm going to show you one portfolio that one of our clients have invested in. This is a portfolio where we took two bonds maturing in 2022. This was constructed in Feb of 2022. So very short bonds. And we took one bond maturing in 2023 and one in 24. And the portfolio has given a holding period return because some of the bonds have not matured yet. Holding period return of close to 9%. If you take from Feb to now, which is close to which is September of 22. Interest rates have gone up substantially. The 10-year GSEC yield has moved very sharply higher. Short-term interest rates have moved up. All AAA bonds have given very low returns because the rates have moved up. And Bharat bond ETF rates have moved up. FD rates have been traditionally very low. So investors have been suffering from any product that is available in the market. But the portfolio, ladder portfolio, which we have given you here, it had bonds of diversified bonds. One was UP Power maturing in October 22, which is coming up for maturity now. And we believe that UP Power on a longer term basis could be of higher risk, but they had come and issued uh, uh, 5,000 crores of bonds in April, which made it safer to invest in October 22 bonds because they don't have any liquidity risk here. Other housing, we believe it's a very good company to invest in. It's a stable company and a good capital adequacy ratio. Again, the bonds were matured in August. Then we had two bonds. One is Swatantra Microfinance. It's a microfinance company promoted by the Aditya Birla family and offering very decent returns for 23 maturity bond. And TVS Credit, again promoted by the TVS Motors, very strong south-based group. That was also offering a good yield, good returns. And with this portfolio, what the client now has got is one bond has already matured, which was reinvested at higher levels in in another bond, and one bond is maturing in October 22, and the RBI policy is going to make sure that rates are going to go up, so the reinvestment rate will be very much higher. And the other two bonds are still continuing to do very well because they have come down in terms of maturity, and the yields have been very, very good, so that they don't, even if interest rates are going to go up, the yields on these bonds are not going to rise sharply, and investors will still make money even if they sell the bonds. So the holding period return, because of some of the two of the bonds are not matured yet, is close to 9%, and which is much better than any other option that has been available in the market. Similarly, we have constructed many other bond ladders like this, which have been invested by our advisor community for their clients. And all these bonds have been performing, all these portfolios have been performing extremely well and delivering returns of 3 to 4% or even 5% over other similar duration products. So come to INR bonds. If you're a financial advisor, log into our partner portal and become our partner and give the best fixed income solutions for your clients. Get the best investment options and a seamless investment process through the portal interface, which is similar to a star MF. And all you need to do is just buy the bonds for your client through INR bonds, risk analytics. And the clients get the best options, and you also get more and more assets of under fixed income management. And if you're an investor, download our app, QuickInvest by INR bonds, which is a curated list of bonds, which is each bond is given the most information and also our own proprietary risk rating. And all you need to do is select the bond and click on investment, the straight through in-app investment process. Continue to follow search for yields. It is the 100th. The next will be 1,000. So we'll continue to keep educating, giving knowledge, and giving the best investment options to investor to search for yields. And the best way to subscribe to search for yields is to subscribe to our YouTube channel. And also, if you want all this in your mailbox, then what you can do is come into INR bonds and sign up and get all the benefits of the bonds that is available in the market for you to invest in. Thank you very much for listening in.